Hey Bowtie Nation, Joseph Hogue here, and back by very popular demand, or maybe because I couldn't take one more YouTuber promising that $2 penny stock is going to let you fire your boss by Tuesday, we're updating one of the most popular videos on the channel. The last time we did this, I showed you 5 stocks with the power to surpass your job. Not with some get-rich-quick fantasy, but with the real high-growth companies and a long-term plan. That video took off. Views, comments, and even more importantly, helped a lot of you start building towards financial freedom. But here's the thing, in that video, I only hinted at one of the biggest secrets in my own portfolio. In this updated version, I'm going to show you how each of these 5 stocks could replace your income on its own, but I'm also going to give you the exact option strategy I'm using for each one of these to supercharge my returns. I'll show you one strategy that makes money whether a stock price goes up or down, and another that's going to make your money back fast on a losing stock. Nation, I've been in this game a long time, investing since 1999 when I made less in my entire enlistment as a Marine as I can now in a single day with these strategies. Over a decade as an equity analyst in private wealth and venture capital gave me the foundation to develop and refine the investing strategies I'm about to share, strategies that actually work in the real world, not just in some YouTuber's fever dream. Let's get started with shares of Uber Technologies, ticker UBER, up 50% just this year, and with some news that caught my attention lately. Uber dominates that ride-hailing market with between 68 to 75% of the US market, and is expected to grow at that solid 15% pace to $50 billion in revenue this year. And for that kind of growth, the shares still aren't expensive at 4 times on a price-to-sales basis. But what caught my attention lately has been the speed at which Uber is signing partnerships to keep growing into the future. The company announced a partnership with Pony AI earlier this month to deploy the China-based robotaxi on its ride-hailing platform in key markets across the Middle East later this year. That follows another deal the week before to expand Uber's partnership with China's WeRide to enter 15 more cities globally, and the company expanded its partnership with self-driving Waymo in the US last year. Nation, Uber is quickly and quietly becoming the company that is going to take over public transportation and will be the first to win from self-driving taxis. Shares of Tesla trade for a price to sales of almost 12 times, much of that valuation on that same promise in robotaxis. Applying even half that valuation on shares of Uber would mean another 50% bump along with that growth ahead. I'll be pairing each of our 5 stock picks with an option strategy in this video, just like I showed you in our previous video. Each of these stocks alone can replace your income given 5 or 15 years of investing, but these option strategies are going to do it in less time. And in fact, the first 2 strategies are perfect for retiring your job right now. This first strategy, called the covered call, is a popular income strategy, turning your stocks into monthly cash machines. I'm going to show you how it would work with Uber next, but for every 100 shares of stock you own, you sell 1 call option and then collect that cash for it immediately. This is the exact strategy Chad over at Lifter's Gym uses to create $10,000 in income a month, like the screenshot he sent me back in February, selling call options on stocks like Alibaba, Alphabet, and Nvidia. Putting this to work in our shares of Uber, we can go to the options here, and you can use these strategies each month, for some stocks even each week, but we'll go out a couple of months here to the options expiring July 18th. And on the left, you see the call options. With Uber trading around $91 a share, we want to pick a strike price above that because that's the price the option buyer is going to be buying the stock from us. So if we use the $100 strike call options on Uber, that means we give another investor the right to buy the shares from us, the shares we just bought for $91 each, to buy those at $100 each, or about a 10% profit from now until mid-July. Now for that, selling that call option means we collect this money right now. So we're going to go to the trade screen and set our price. Here we'll sell the call options on 500 shares of Uber for $2.55 each. And you can see, that means we collect almost $1,300 right now. Now I know all the options jargon can be confusing, so I'm going to link to a video on the options basics in the description below. But folks, that is $1,300 in cash flow you're collecting right now on a single stock. Money that you can use to pay the bills right now. And you can use this strategy every single month. We're just getting started, but a big part of doing that first video was to protect you from all the scammers here on YouTube, the investing experts promising you rainbows and unicorns, but doing absolutely no real analysis. Well, after seeing the success of that video, other creators went full clickbait, trying to pull you into that promise of just $100, $75, even $50 invested would surpass your job. This one's my favorite here, turning $50 into $7,000 a month in income. Not only is it an AI-generated video, the first stock pays a miserable 2.3% dividend yield. But Robbie Robot here reasons that invest $50 a week over 30 years, and if you don't pay any taxes, the shares surge by 16% every year, and the dividend grows by 17% every year. If all these impossible scenarios happen, then in 30 years, you're going to have that $5,000 a month. So yeah, I felt like I had to set the record straight again with math, not magic beans. Back to our list, and while shares of Nvidia are just about break even for 2025, the stock has jumped 38% from the April low and still has room back up to its $153 peak. Besides the back off in the trade war with China and that jump for Nvidia, the company got another boost announcing a deal to build a 500 megawatt data center in Saudi Arabia. Nation, as much as you know I like AMD on its valuation, you cannot deny the growth here with Nvidia, forecast to grow revenue by 53% this year to $200 billion. And on that forecast, shares would be priced at just 15 times on a price to this year's sales, a huge discount to that 35 times multiple it's traded at over the past year. And here, the cash secured put strategy is another options income strategy, and this one is used along with that covered call strategy to create income whether a stock goes up or down. The best part is with this strategy, you don't even need to own the stock. Here you're selling a put option, giving another investor the right to sell that stock to you for a set price, and for that, you're going to collect that cash. Here's how this one would work for even more income. Say you wouldn't mind buying shares of Nvidia here on the upside idea. Instead of buying them outright at that current $130 a share, we can go to the options here. And again, we'll use these July options for a couple of months out. And here we're using the put options instead of calls, coming down to the $130 strike price, right where the stock is trading at now. Selling these options to another investor means if Nvidia falls under $130 over the next 2 months, we're going to buy them for that price from the put buyer. Basically, we're just agreeing to buy the shares for the same price they are in the market right now, where we're going to buy them anyway. But for this, we collect that money right now. Here we put in our order to sell those put options, and we'll again do this on 500 shares and set our price per option between the bid and the ask here at $9.40 each. This means for agreeing to buy those shares over the next 2 months at $130 each, something we wanted to do, we're going to collect that almost $5,000 in cash. And then why this works so well with the covered call strategy to create income every month is that with this secured put strategy, we don't even own the shares yet. We just collect that $5,000 and do nothing. If the stock price stays above $130 from now until that option's expiration, then nothing happens. We keep that $5,000 but don't get the shares. If though the price of Nvidia does fall under $130 strike price, we keep that $5,000 but we also buy the stock. Now, since we own the stock, we can turn around and use that covered call strategy to create even more income each month. Again, nation, I know options investing may sound like a foreign language, but it is your best tool to not only increase your returns like with the 3 strategies I'll show you next, but also lower your risk and create income. That's why I'm relaunching my Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through the 29 option strategies, when to use them, and how to set each up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much you can make. Right now, I'm relaunching that course at a 38% discount. Save $150 off, but only for the next 3 days. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. Now, that $150 launch discount is only available with the coupon code in the link below. I'll leave that in the description, so look for that or scan the QR code here. Back to our list, and Meta Platforms, ticker META, is another one that caught my eye recently, putting 2 pieces of news together. Now, we already know that Meta dominates social media with over 3 billion users just on its Facebook platform, but another 2 billion on Instagram and WhatsApp. But there's an untold story here that could see these shares highly underestimated. First is kind of a bifurcation in the advertising market that I've noticed through earnings reports. While other ad-driven companies like Snap and its Snapchat platform have gotten slammed on fears of lower ad spending this year, shares of Meta jumped when it reported a surprisingly strong ad revenue outlook. So what we're seeing is, faced with having to cut ad spending budgets ahead of a consumer slowdown, advertisers are triaging, cutting from the lower tier platforms while keeping ad spending or even increasing it on Meta platforms, Facebook and Instagram. Now, that gain in market share is big news, but then an article on The Verge earlier this month is giant if you put them together. The article by Nilay Patel, editor-in-chief of the site, was meant as a warning, but for investors, it is a big giant dollar sign pointing right at Meta. In that article, Patel translates an interview Zuckerberg did recently about the future of AI and advertising, where Zuck pretty much outlines the company's plans to wipe out the entire advertising industry using AI to create an endless number of content pieces for testing and delivery. Zuckerberg here says, "We're going to get to the point where you're a business. You tell us what your objective is. You just connect your bank account and you don't need anything else." Nation, this is much bigger than it appears. First, we know that Meta is gaining market share from rivals in that ad spending slowdown, but put it with that AI future, and you have Meta moving even further into the total media ad spending ecosystem, a trillion-dollar market, and with very real plans to take everything. That means that $186 billion in revenue forecast for this year may be a fraction of what the company can book over the next few years. These next three option strategies, instead of creating that immediate income, are going to boost your returns so you build that portfolio faster and get to where you can live off your stocks. And first up here is just a simple call buying strategy using the long-dated options or leaps. This is where instead of buying the stock, you're going to buy a call option to buy it later and amplify your returns. We see here that Meta is trading for $660 a share, but we can go to the options. And for this strategy, we're using long-dated calls. So we'll scroll all the way down to January 2027 options. These are going to give us the right to lock in a price for Meta for the next 20 months. Let's use the $750 strike options. And you want to use a price where you're confident the stock can reach over that amount. So $750 a share is only 13% above the current price. And here we'll be buying one call option worth 100 shares of Meta for $104.50 each. And the beauty of this, not only is it going to amplify your returns, but buying 100 shares of Meta right now would normally cost you $66,000. But you can lock in the price at 100 shares for just over $10,000 right now. How this works to amplify your returns, though, is say over the next 12 months, shares of Meta rise to $800 each. Instead, though, buying these call options for that $104 each, the current delta on the options, if Meta reaches that $800 over the year, these options would be worth at least $162 each for a 55% return on your money. And that's the same return you needed in our first video to surpass your job in just 5 years. Google parent Alphabet, ticker GOOG, has been one of the most volatile of the Magnificent Seven stocks, jumping on its earnings but then crashing on monopoly rulings. Alphabet has been hit with 2 monopoly decisions, and a growing chorus within the Department of Justice is to break up the company. But here's the thing, I showed you in our April 28th market update that a breakup might actually be the best thing for investors. In it, I took revenue from each of Alphabet's segments against price-to-sales valuations for competitors to show that segments alone could be worth as much as $4 trillion, double the market cap as separate standalone companies. And all that doesn't even include the upside potential in the company's Waymo self-driving unit. I'm going to link to that video in the description so we don't have to rehash all the analysis, but this simple sum of parts valuation on Alphabet shows a 100% return for investors willing to ride out those ups and downs. The straddle option strategy is one of my favorite because it allows you to make money whether the stock price goes up or down. It's a short-term strategy used when you expect some news or an earnings report to drive the stock hard one way or the other, but you're not quite sure which way it'll go. Buying a call option and put option covers you in either scenario. Here we see shares of Alphabet are trading for around 161 each as I record this video, and we know the company's next earnings report is scheduled for July 21st. We want to buy the option that includes that date so we profit from any big move one way or the other. Here we'll use the August 15th options, which are the first expiring after earnings. We want to buy the call and put options at the same strike price, both where the stock price is trading at right now. So we'll put in an order to buy one call option and one put option, both at the $160 strike price expiring August 15th for a total cost of $19.75 each. Now again, these two options give us both the right to buy and sell shares of GOOG for $160 each from now until August 15th. So if the stock jumps higher or gets crushed on those earnings or any other news, we profit either way as long as the move is that $20 a share or more in either direction. This next stock could do what Tesla did in 2019, up 2,000% in just 3 years. And I'm going to combine it with an option strategy that will make your money back fast on any losing stock. All 5 of the stocks in this video can replace your job, but the option strategies will supercharge your portfolio. Now, if you're not ready to take advantage of that $150 relaunch discount to the options course, check out the video linked in the corner here. I'm going to show you the options basics to get you started and how I used one strategy to make a $55,000 profit in one day. Shares of Rivian Automotive, ticker RIVN, are up 30% in just the last month. Could have the most potential on our list. Now, I've owned shares for just over a year, and while revenue growth of just 5% this year isn't great, we could be looking at 40% revenue growth next year. The stock is trading very cheaply at just 3 times price to sales. And putting together recent news has me really excited about this stock. First is the company's giant stockpile of batteries ahead of those tariffs. While Rivian manufactures all its trucks in the United States, some components and critically the batteries are sourced from China and South Korea. Even though the tariffs had been lowered, this stockpile is still going to help keep its costs down versus other automakers this year. More than that though, with the stunning drop in Tesla favorability, Rivian has launched its first nationwide ad campaign coming early next year, has already seen its own brand image jump. Q1 earnings unlocked another $1 billion in funding from Rivian's Volkswagen partnership, so cash funding is there, and this one is growing into that per unit efficiency that took Tesla shares booming higher 5 years ago. Waiting for those shares of Rivian to jump higher though, you know what a long and painful wait it's been at times. Shares are up 30% just in the last month, but the last year has seen them crash from $17 each to just $10 and then back up past at $15 a share. If you've ever been down so far on a stock, or for these where that short-term pain is just too much, the stock repair strategy is perfect for you. Not only will it help you make your money back on a losing stock, but even turn a profit, even if the stock price doesn't jump higher. Now I know the graph here looks confusing, but assuming you already own the stock, you set this up by buying a call option and then selling 2 other call options at a higher strike price for every 100 shares you own. Let's say you own 100 shares of Rivian. So using this, you would buy one call option maybe at the $15 strike price and then sell 2 other call options at the $17.50 strike price. Here we can buy that call option at the $15 strike for about $3 each and sell the $17.50 options for $2.10 each. But since we're selling 2 of those for every one we buy, we actually collect $1.20 for each share. We are getting paid $1.20 per share, which can help offset the price we originally paid for the stock, but are also getting a free call option at that $15 strike price. If shares of Rivian stay above that $15, we will make money on our shares and that call option, all the way up to the $17.50 price on the other calls. And if the stock doesn't move higher, who cares? We collected that $1.20 a share to lower our cost, can do it all over again. Get your $150 discount on our options investing course only with the special coupon code in the link below. You'll get that strategy finder so you know which of the 29 strategies to use, the options calculator to know exactly how much you can make. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.